Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City. There are some obvious differences here that I've been at pains to point out compared to the Chicago contract. Notably, the pullback up in early July from December 2020 to date uptrend, currently in the 597, that was below the long moving average, currently 626. However, there were in recent days quite a few similarities here with the Chicago contract. There was a bullish halfway hesitation, though a singular one, not a double, during the pullback up, with an initial target X in the 713 area and a secondary target X1 in the 742 area. Both have been achieved and will now be retired. We also have the same monthly key reversal up in July, and this is key. The upper tine, currently 761, of the late March to early July shallow bullish shift pitchfork, this has capped the recent market, much it has as in Chicago, and caused a breakout lower from the recent July-based rising wedge pattern, especially the lower trend line, currently 746. Now, this has also been the mid-July uptrend. And the question now is, what's next? Well, we could possibly have a potential target X2 for the wedge pattern in the 697 area, which is really very interesting because that is where we have the 50% absolute Fibonacci line. And a little below it, the 50% Fibonacci line of the big old 2011-2019 move at 692. Now, all this still keeps the market from testing the gently rising middle time below that from the same July to late March, early July shallow bullish shift pitchfork. Thus, you could have such a move down and still retain the bullish incentive. There's definitely one to watch. Just remember, we still haven't dented at all the monthly key reversal up we saw in July. Minneapolis wheat. I continue to admire this contract, and with some passion. It is a brilliant piece of technical action here. I've repeated the same now, for months. There are a number of, let's be honest, quite a few huge differences here in this contract compared to Chicago and the Kansas City contracts. For starters, and perhaps supremely important, the August-December 2020 bullish Andrews picture, which has run this market higher so successfully, is still valid, if you allow for some aberrations. The key feature has been how the market has punched up and down, over and under the fantastic upper time, currently 928. All the time prices have moved higher, and when it looked like they had failed, those very same actions had also allowed me to draw a more acute April to May bullish Andrews pitchfork. This second one has grown like a branch out of the first one, and we've found often ourselves in between the lower tine, currently 934 of the new Andrews, and the upper tine of the old Andrews. However, not anymore it seems, as this past week prices have reasserted themselves in between the upper tine and the middle tine, currently 854 of the original bullish Andrews pitchfork. I'd like to take one more week to make certain, but I suspect I'll likely retire the newer bullish and more acute Andrews pitchfork by the next commentary. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.